Hi all, I wanted to make a quick video again on trading psychology. I'll discuss a few points during the course of this video. Before I begin, I would like to mention that this is an educational channel. All content over here is for the sake of education. Kindly read the disclaimer you see on the screen and in the description below. With that said, let's proceed. So the topic I wanted to discuss today was the fact that normal intelligent people, they seem to struggle in the markets when they initially get in. Now, these are people who are well educated. Uh, they're generally graduates, maybe sometimes even postgraduate, sometimes even more educated than that. But so the idea is like I'm educated, I can read charts and stuff like that. So this should be a cakewalk for me. And the market, when you come in, it's initially very good to you for a few days or a few weeks or a few months, but then it starts showing in its color, and then you start to struggle. And normal logic says that since you're well educated, you're intelligent, you should do well, right? But that does not apply to the markets. You will also feel at times that whatever you're doing, the market is doing exactly opposite of that. You apply your logics, you learn indicators, you learn price action, you learn support and resistance and all of that, and yet whatever you do, the market seems to be doing opposite of that. When you think the market is going to go high, it goes low, and whenever you think the market is going to go low, it goes high. I have been through all these phases, and all I can tell you is, if you feel that you are fairly intelligent yet you are struggling with the market, let me just tell you that you're not alone. We have all been there. Market has its own way of working. uh, Generally in life, intelligent people will not run with the herd. I mean, if 1,000 people are running in one direction, we generally, being educated and intelligent, will wait, we'll ask somebody, why are these people running in one direction? Well, in the market, the herd mentality works. If something is going up, it keeps going up. So rather than questioning, sometimes, and not all times, but sometimes it's just good with some common logic to jump into a trend that's going up without questioning it too much. Because this market, when things go up, it goes up crazy. I remember watching the uh, BSE stock about 2 years back, 1.5, 2 years back, and it was sitting at about, if my memory serves me correct, at about 600, 700 rupees. Today it's 5,500 rupee plus. I think it's in that ballpark. So it's gone up like 6, 7 times in a span of less than 2 years, maybe. I'm not really sure. I don't track that stock every day, but I remember looking at that stock about 1.5, 2 years back, somewhere around that time, and it was about somewhere between 500, 600 or 700 rupees. And from there, it has gone all the way about 6, 7, 8% up. So when the market wants to go up, there are no limits. A stock like HAL, Hindustan Aeronautics Limited, I remember seeing that stock at about 11, 1,200 rupees, and then it crossed 4,000, 5,000 rupees. So anything is possible in the markets. There are no limit on tops, and there are no limit at the bottom also. You can't do a very good study and come into the market, okay, this stock has run up too much, I'm going to short this stock. There is no way it can go beyond this. Believe me, I've done that. I've shorted a stock and burned my fingers badly. uh, I still remember one day where I lost about 1.5 lakh rupees, approximately 1.25 or 1.5 lakh rupees, shorting Bajaj Finserv. Not Bajaj, I think it was Bajaj Finserv or Bajaj Finance. I think it was Bajaj Finserv before the split. Now, I had done my homework and I was expecting a negative start that day. And believe me, I had 20 stocks on my screen. They were the top 20 Nifty stocks. And all the stocks opened in the red, except this Bajaj Finserv. It opened in the green and started climbing up like crazy. I thought, what the hell? This will also sooner or later fall, because the remaining Nifty is all red and everything is falling. But no, Bajaj Finserv did not fall that day and went on and made about, that time it was before the split, so the stock was not that 1,500, 2,000 that you see right now. It was a different sum. I really don't remember how much it was, but it was a big amount. And that stock just rallied that day quite a bit. Supposedly there was that news of a stock split which I didn't know about. I was just my view was it has run up too much, and since the market is going to collapse on that particular day, I was sure market Nifty is going to fall that day, and Nifty did fall that day. All of the stocks did fall that day. Only Bajaj Finserv shot up, and I lost about 1.2 or 1.3, somewhere in that vicinity, in one single day on that stock, just shorting that stock because I was applying my logic. Does not work. Another important thing I heard somebody say, I don't know who said it, but that stuck onto me, is trade what you see and not what you think. I had come to the market applying my logic. This is run up too much. Can't run up. It has broken all pivots and everything. It has to fall now over here. Don't do that. Come to the market blank. There are many days I've come to the market planned with a certain plan of execution, and I've lost a lot of money. Nowadays I come to the market blank. I don't have a view on the markets generally. Okay, I read this. I read the news. I see everything. I note where Gift Nifty is. I see where US futures are. All of that is fine. But still, when I sit to trade, another good thing I've done is I generally don't trade the first 15 minutes because markets are very volatile. I wait to settle down. In my earlier days, when I used to, when I had just begun, I used to either go long or short initially. I used to think I know what I'm doing, and I've lost a lot of money, going short or long as soon as the market opens. Later, when I burned my fingers very badly, I've stopped doing that as well. So always come to the market with a blank slate and see where the market is going. There may be some things that the market is factoring in, or it knows that you do not know. Remember, market is always one step ahead. By the time the news reaches you, it has already been through the top channels and they have already done what they have to do. Then only that news has come to you. All right. So the market is always one step ahead of you. Chart is always one step ahead of fundamentals. So if you're an investor and all of that, then you can do fundamental studies. But what I've realized with time is fundamentals also follow charts. If the movement needs to happen, it will first happen on the charts. Then the fundamentals will pick up. All right. So I just wanted to make this video to tell fellow traders who are fairly educated, who may be questioning their own logic. I am fairly educated. I understand English very well. I understand what videos are trying to tell me. Yet, whenever I take a trade, I make a loss, and this market just goes against me all the time. Don't be disheartened. You're not the only one. We have all been there. Market has got its own way of teaching you things. All right. It's a different world. It's got its own way of working, and it will teach you things over time. Trade what you see, not what you think. That's a very important thing I wanted to share in this video. Trade only what you see, not what you think. Don't come pre-planned into the market with a plan of action. Sometimes it may work, all right, but generally come to the market blank, see how the movements are happening, let your indicators work out, relax for the first 15 minutes, see where the market wants to go. Then if you find a good opportunity, take it. Otherwise, it's okay not to trade every day. I mean, if just because you're an intraday trader does not mean you have to trade every day. Good traders, they hardly take 4-5 trades maybe a month, and they take those good trades, they make solid money, and they're out. There are people who do that. There are people who only trade futures because they see that they're getting leverage in futures. They can buy so many X Nifty by paying a small margin, and they just roll over futures. Now you may say that, okay, you're getting a certain percentage of exposure, maybe 5x exposure. When you lose also, you will need 5x more than your capital. I totally agree. But look at it from an optimistic person's perspective. He knows eventually Nifty will not fall, and as long as it's rolling over, eventually he's going to make money. All right. So different people, different approaches. Everything works if you follow a plan of action. What works for you may not work for me. What works for me may not work for you. But as long as you're disciplined and you follow a certain plan of action, you can work with only MACD and make money. You can work with only RSI and make money. You can work with only moving averages and make money. All right. In my view, I have learned that moving averages generally work for me. Also, I'm very particular about first 15 minutes, how things are going and all of that. MACD, I tend to follow MACD a little bit. I pay a lot of attention to Fibonacci pivots, but then you may be completely different. You may be having a different set of indicators that work for you. There's no right or wrong over here, and don't ever be disheartened because things are not going your way. Sooner or later, they will go your way. Remember one thing: in market, discipline is more important than intelligence. A person who's not very intelligent will have a higher success rate if he's disciplined, and a person who's very intelligent but not disciplined will always fail in this market. So be disciplined. If you make a loss once, twice, shut your system, walk away. If you make a profit, shut your system, walk away. It's just because you made a profit, the day went good for you, you don't have to keep experimenting with your luck again and again. Remember, every time you take a trade, you are increasing your chances of losing. All right. So in summary, don't get disheartened. Discipline is more important than intelligence. Intelligence is also important, but discipline is more important. Market has its own way of working. Generally, you will feel that it's always going against you, and market always favors the minority, but sooner or later you will get the hang of things and how the market is thinking. Once you get onto that, you will do great. Select an instrument that you are comfortable trading with. It can be anything. It can be Nifty, it can be Sensex, or it can be non-index trading. It can be a particular stock. I have traded on Tata Steel and not Tata Steel, Tata Motors and SAIL for a long time. For 2 years, I was only trading two stocks, Tata Motors and SAIL, and I was making good money. So it choose an index that suits you, or choose a stock that suits you, and only trade that particular stock day in and day out. That way you learn the psychology of that stock. All right. Don't keep shifting your goalpost again and again, and be disciplined. As long as you follow these rules, you will do well in the long run. You may have initial bit of struggle, but in the long run, you will do well. I have got so many videos on my channel. They all are going in the same direction. Many indicators, but heading in the same direction. If you follow any of them and get yourself disciplined, you will make money. At least that's the way I think. All right. So don't get disheartened if things are not going your way. Sooner or later, you will come in sync with the market, but you have to be disciplined. You have to give it time. Trading cannot be taught. It has to be learned. All right. I or anybody else cannot teach you. We can give you the ingredients required, but eventually there's a X factor that you can learn only by yourself, and that comes with time. Market has got its own way of moving. You'll many times fall whenever you take a trade and expect that chart to go up. It comes down. First it comes down to take out people and their SLs, and then it goes up. All right. There's another investor, I think investor or trader I had heard, I don't remember his name. He always used to say, enter the trade where you think your stop loss would be, because the market will come and take people who are entering now. It will come and take their stop losses first and then go up. Interesting. And you will find many times that when you enter it, instead of going up, it first comes down, and then it will test your patience and your stop loss, and then it goes up. Happens. It's another part of the trading journey. So again, don't get disheartened. If you're here in the long run, keep your position size low when you're learning. Don't go with big exposure. Don't take big trades. Don't take trades beyond your risk taking capacity. Trade with one lot if you're trading index. Trade with one lot if you're trading equity futures or options. Don't go beyond your risk taking capacity. Keep your position size limited. Give yourself a year or two at least to get yourself accustomed to how market works, and I'm sure in the long run you will do well. All right. So this video was for people who are fairly intelligent, fairly educated, but are disheartened at this point of time because things are not going your way. Don't worry, it will go your way. You just need to give it time and understand the ways of the market. All right. I'll see you in the next video. Thank you so much for watching. If you are already a subscriber, consider becoming a member on the channel by clicking on the join button. If you're not yet subscribed to the channel, then subscribe to the channel. Share this video with your family and friends. Also subscribe to our free Telegram channel. The link is given in the description below. Members have access to our WhatsApp channel, and buy all your Amazon products from our Amazon affiliate link given in the description. You don't pay anything extra. We make a small commission every time you make a purchase through our Amazon affiliate link. Thanks a lot, guys. I'll see you in the next video. Take care. Bye-bye.